Welcome back to Build Wealth Now News, or BWNN. I'm your host, Billy Bob, and Happy New Year 2026 to our viewers. We're kicking off the year with something special here on BWNN, the channel where markets meet clarity. Joining me is Sarah, our brilliant market analyst with both CFA and CMT credentials. Sarah, Happy New Year.
Happy New Year, Billies, and Happy New Year to all our viewers. 2026 is going to be a big one, and we're starting it by giving something back to the community. We're officially open sourcing the Relative Strength Matrix system.
That's right. The RSM, our multi-time frame technical analysis tool, is now fully transparent and available for anyone to explore, test, and improve. We believe that open systems build credibility, and we want our viewers to have full confidence in the tools we use.
Exactly. Open sourcing the RSM means you can see every formula, every logic step, and every assumption. It's not a black box. It's a clear, modular framework for analyzing market strength across time frames from 3 months to 5 years.
And we're not just sharing the code, we're sharing the philosophy. The RSM is designed to help traders and investors spot short-term momentum, medium-term breakouts, and long-term trends with just a glance.
We'll walk you through how it works, how to interpret it, and how to apply it to stocks, ETFs, and indices. And because it's open source, you can adapt it to your own workflow, whether you're using Thinkorswim, Excel, Python, or any other platform.
So let's dive in. Today we're diving into one of the most powerful tools in technical analysis, the Relative Strength Matrix. It is all about understanding the relative strength matrix and how to use it to give you an edge in 2026. Further on, we will pair it with fundamental analysis to build a complete picture of the business each stock is involved in.
Yes, Billy. It is exciting time to be in 2026. The Relative Strength Matrix, or RSM, is one of my favorite tools for multi-time frame analysis. It's elegant, efficient, and incredibly revealing. And most of all, it is an evidence-based process which is simple to comprehend and use.
All right, let's start simple. What exactly is relative strength in this context?
Great question. Relative strength here refers to a percentage measure of how strong a stock or index is compared to its own historical price range over a specific period. The formula is relative strength over the end period is equal to the current close minus the lowest low over the end period. This is then divided by the difference of the highest high and the lowest low over the same end period. The decimal is multiplied by 100.
So it's like a normalized strength score from 0 to 100?
Exactly. If RS is near 100%, the stock is trading near its highest point in that time frame. If it's near 0%, it's near the lowest. It's a pure momentum snapshot.
And the matrix part, that's where it gets juicy, right?
Yes. The RSM stacks these RS values across multiple time frames: 63 days, 3 months, 126 days, 6 months, 189 days, 9 months, 252 days, 1 year, 504 days, 2 years, 756 days, 3 years, and 1,260 days, 5 years. This lets us see short-term, medium-term, and long-term strength all at once.
So if RS63 is above 50% and climbing, that's bullish short-term?
Correct. And if RS63 is higher than RS126, it suggests upward momentum is accelerating. But the real power is in comparing all the RS values. If RS63, RS126, and RS252 are all above 90%, we're likely seeing a medium-term breakout. If all the way up to RS 1,260 is near 100%, that's a long-term breakout, often seen in mature or dominant growth stocks.
What about newer companies? They won't have 5 years of data.
Exactly. You'll see NAN, not a number, in the RS1260 or RS756 columns. That just means the company hasn't been listed long enough. For those, we focus on RS63 and RS126. If those are in the 90% plus zone, it could be an early breakout.
And you mentioned the NVDA chart we attached. What's the story there?
That chart shows NVIDIA's relative strength lines before its breakout in early 2023. The magenta line is RS63, cyan is RS126. Those are your short-term indicators. When RS63 crossed above RS126 and both trended toward 100%, it signaled strength. By January 9th, NVDA had broken out decisively.
So this matrix isn't just numbers, it's a visual roadmap.
Exactly. You can scan dozens of stocks or ETFs, sort by RS values, and instantly spot strength, weakness, or sideways action. It's technical analysis at its most efficient.
All right, folks, that's the Relative Strength Matrix, a powerful tool for spotting breakouts and understanding momentum across time frames. Now, we'll bring in fundamental analysis to complete the picture. Sarah, thanks for the insights.
Yes, let's move on to it, Billy. Fundamentals plus technicals. That's how we build conviction. And the best part is that everything we're using comes from publicly available financial statements. The income statement, cash flow statement, and balance sheet. You can pull these numbers from Yahoo Finance, Fiscal.ai, or even directly inside Thinkorswim. For deeper accuracy, you always go back to the company's 10Q and 10K filings.
I know a lot of you have been waiting for our Buffett-style intrinsic value calculator. And Sarah, I've got to say, this is the part where people usually get intimidated. But you've promised me it's not rocket science.
It really isn't, Billy. Once you understand the flow, it's actually pretty logical. And the best part? All the numbers we need come straight from the company's financial statements. The same ones you can pull from Yahoo Finance, Fiscal.ai, or even Thinkorswim.
So no secret formulas, no Wall Street wizardry.
Exactly. Buffett built his fortune using numbers anyone can access. The magic is in how he interprets them.
All right, let's kick it off. Step 1, owner earnings. You've said this is Buffett's favorite metric.
It is. Owner earnings tell you how much cash the business actually produces for its owners. Not accounting profit, real cash. And the formula is simple. Net income, depreciation and amortization, maintenance CapEx, plus or minus changes in working capital.
And all of that is right there in the financial statements? Yep. Net income, income statement. Depreciation and amortization, cash flow statement. CapEx, cash flow statement. Working capital, balance sheet. Yahoo Finance and Fiscal.ai already extract these numbers for you. But if you want to be Buffett level precise, you go to the 10K. So owner earnings is basically what cash is left after keeping the business running.
Exactly. That's the cash we can project into the future.
Okay, so we've got owner earnings. Now we need to figure out how fast they'll grow. And this is where ROE comes in, right?
Right. Buffett doesn't rely on analyst forecasts. He looks at the company's own economics. Growth comes from...
And ROE is easy to find. It's on every finance website.
Exactly. But Buffett doesn't look at just 1 year. He looks at 10 years of ROE to see if the business is consistently good. And he checks that ROE isn't artificially inflated by debt.
So if ROE is high because the company borrowed a ton of money, that's a no-go.
Buffett would run the other way.
All right, so once we have the growth rate, we project owner earnings forward for 10 years.
Yep, it's just compounding. This gives us a decade of future cash flows, the raw material for intrinsic value.
Now here's the part everyone hears about but rarely understands: discounted cash flow.
It sounds fancy, but it's simple. Money today is worth more than money in the future. So we discount those future owner earnings back to today using a discount rate.
And Buffett uses treasury yields for that?
Yes, he uses the long-term treasury rate as the baseline. For BWNN, we take the 10-year treasury yield and add a small business risk premium. Then we do that for all 10 years.
And then we add the terminal value, the value of all cash flows beyond year 10.
Right. Buffett is conservative. He often assumes zero growth after year 10. Then we discount that back to today as well.
Once we have the total intrinsic value, we divide by shares outstanding.
Exactly. Shares outstanding is available on every finance site, but again, the 10K is the gold standard.
And finally, the famous margin of safety.
Buffett wants the stock to be 20 to 40% below intrinsic value before buying. That's how he protects himself from mistakes, surprises, and market craziness.
So the BWNN intrinsic value calculator follows Buffett's exact logic, but in a clean, open source format. 1. Owner earnings. 2. Growth from ROE times reinvestment. 3. 10-year projection. 4th, discounting. 5. Terminal value. 6. Intrinsic value per share. 7. Margin of safety.
And the beauty is, anyone can do this. All the numbers are public. All the formulas are transparent. And once you understand the flow, it becomes second nature.
All right, folks, that's the BWNN intrinsic value calculator. Buffett's philosophy, modernized and open sourced. In the next episode, we'll run a real company through this system and show you how it works in practice.
This is where valuation gets fun.
Thanks, Sarah. You have made it simpler for our viewers to value a business. To our viewers, if you're looking for January 2026 plays, these are your starting points. Stay tuned. If you found this deep dive helpful, smash that like button, subscribe, and hit the bell so you never miss a stock breakdown. Also, please leave your comments below. We started a BWNN portfolio with $100,000 and will continue to update the viewers on its progress. Once again, Sarah and I wish you a happy new year 2026, and we are looking forward to a great year. BWNN is dedicated to research the businesses behind the stock names. Our research are done with artificial intelligence assistance using the best practices in the industry. Please note that investing carries its own risk, and you should do your own research before committing any stock to your own portfolio. This video is done for educational purpose only.